I used AI to predict the price of Apple stock in 10 years, and AI came up with two answers. Let's hear what they are. The first approach is what we'll call the EPS growth and PE multiplier method. Here's how it works. AI dug into Apple's historical earnings per share growth, often known as EPS growth, and settled on an 8% annual growth rate. This 8% is based on Apple's steady revenue expansion and its track record of innovation. Now, using this growth rate, the AI projected Apple's future earnings for the next 1, 5, and 10 years by applying this 8% rate year-over-year works. AI dug into Apple's historical earnings per share growth, often known as EPS growth, and settled on an 8% annual growth rate. This 8% is based on Apple's steady revenue expansion and its track record of innovation. Now, using this growth rate, the AI projected Apple's future earnings for the next 1, 5, and 10 years by applying this 8% rate year-over-year. Once it had these future EPS numbers, AI then took a key metric in stock analysis, the price-to-earnings ratio, or PE ratio. It assumed a constant PE ratio of 33, which reflects the market's typical optimism about Apple's future. Then it multiplied the projected earnings by this PE ratio to forecast the stock price. Alright, so here's the exciting part, the predictions. According to this method, Apple's stock price in 1 year could reach $213.84, 5 years could rise to $291.06, and in 10 years, it might hit a notable $427.68. But that's just the first approach. Let's move on to the second, slightly different calculation. This second method is called the discounted cash flow, or DCF, approach. In this case, AI analyzed Apple's cash flow, or the actual cash the company generates after paying for expenses. It then projected these cash flows forward by 10 years. Here, the AI applied a slightly more conservative growth rate of 6% to reflect factors like market saturation or potential economic slowdowns. Finally, it used a discount rate of around 10% to adjust for inflation and investment risk, essentially asking, what's the future cash flow worth in today's dollars? The results from this approach are a bit more conservative. With the DCF method, AI estimated that Apple's stock price could land around $210 in 1 year, $275 in 5 years, and approximately $380 in 10 years. So after considering both approaches, we have two expected outcomes for Apple's stock price. For the EPS growth and PE multiplier method, we get $213.84, $291.06, and $427.68 over 1, 5, and 10 years. And with the discounted cash flow method, we see a slightly lower estimate of $210, $275, and $380 over the same time frames. These two approaches give us a range, showing both the optimistic scenario if Apple continues on a strong growth path and a more conservative outlook if growth moderates. In summary, my AI-backed analysis predicts that Apple's stock in 10 years could range from about $380 to $427, depending on which scenario pans out. Let's keep an eye on Apple as it moves forward and see how close these projections come. Thank you for being part of this deep dive into the future of one of the world's most valuable companies.